Hey, what's up guys? I am back. I always come back at a weird time or when something goes wrong. Well, it's been a while and first of all, I want to say thank you guys who are still watching my videos, who are still following me on social media. These days, you'll find me much on Twitter. I don't make much videos anymore due to lack of motivation, I would say, honestly, but I'll try to come back to it. I'll try to make more videos, try to keep you guys informed on these little things that I'm doing. But anyway, let's talk about the big crisis at the moment. And that is the failure of SVB, the Silicon Valley Bank. Fun fact, when I was trying to establish my LLC, I was trying to go through Stripe Atlas, which uses SVB as their banking partner. So I was almost involved in this, but luckily I didn't go with them because their fees were too high. Anyway, so what the big news that's going on right now is that this bank is one of the biggest banks in Silicon Valley that powers, this is where all startups park their money. So they are actually closing down, going out of business because they could not pay people back their money. And on Friday, they were actually seized by California authorities, meaning the company will shut down and it will try to find a new partner in order to help pay people back their money. Their stock, if you look at it, SIVB, it's one of the wildest drops I ever seen. It went from over $300 actually, went all the way back down to, this is wrong, it's not 106. The reason it's 106 because that's paused at the previous day's amount. But when the market opened on Friday, it actually dropped down back to like $39. So that's the price of SIVB. The whole company went bankrupt. And SPY, the SPY index, the top 50 companies, actually delisted the company. So it's pretty much gone from the stock. You can't really trade the stocks. But those of you, folks, if you know this company was going to do this, if you bought the stock, like the 275, if you buy a put there, I read somewhere that if you buy a put for $100, that $100 could turn into almost $1 million in 2 days if you know that's how hard it was going to drop. So, but I didn't know it. If I knew, I would have been rich. But that's the reality. This company, it happens way too fast. In 2 days, it went from biggest bank in Silicon Valley to zero. So, let me explain why. Okay. So I'm gonna do a bit of drawing here just to explain to you guys what's going on. So here you got SVB, right? This is the bank, and then you got a couple of startups, right? Startup 1, and then startup 2, and then etc. So all these companies, when they get funding from VCs, right? VCs are venture capitalists. These are rich people who want to invest in startups, hoping they can return money. So for example, you might invest in Airbnb when they were starting out for cheap. And now Airbnb is worth like billions of dollars. So these VCs, they make a ton of money. So what's going on is VCs, they put money into startups. So a lot of VCs give money to startups. And these startups, now they have a lot of money, right? So they don't want to keep the money in their bank. They don't want to keep the money in with them because they have large billions of dollars, millions of dollars. They have to keep it in the bank. So they all based in Silicon Valley mostly. And in Silicon Valley, SVB is the king of banks. They are like the JP Morgan for startups. They are trustful. People think they're the biggest. They cannot fail. So they put all their money into this bank. So the news is that in 2019, 2020, 2021, so in those years, right, mostly because of the pandemic, the Fed, they lowered their rate to 0%. So this means that people can borrow money very easily with little to no interest, right? So money was available. There's a ton of money. So as a result, SVB got a lot of money in. So in those 3 years, they increased like billions of deposit from customers. So in those few years, they got a ton of money in. Is this too small? That's what she said, but let me zoom in. Anyway, they got a ton of money into the bank. Now they have a lot of money coming in, right? So when you're a bank, when you got a lot of money in, it's both a liability and a asset. So how do you explain this? When you're a bank, what does a bank do? A bank handles your money, right? They take care of your money, make sure it's safe. They put it in a safe. They had to hire security. They had to hire tellers, people to operate their website, all that stuff. So they have to make sure that the money is safe, and that costs money. It costs money to maintain, to make sure the money is safe. Now, all of a sudden, if you got billions of dollars coming into your bank, now you had to hire more people, right? You had to hire more ways to make sure that the money is safe. Now, what do? In a real scenario, well, in an ideal scenario, they keep your money in the bank, and they want to, if you want to come withdraw the money, they give you the money back. But a bank is a business. They had to make money somehow in order to pay all the overhead, and they had to make a little bit of profit, right? So it's a company after all. That's what a bank do. They want to make money too. So what do? Now they had to figure out a way to make money from your deposits. They can't just keep it cash because they'll lose money that way. So now what do? They want to invest that money, right, in order to get some money back. There are a few options. Now, the bank is not a hedge fund. They cannot put money in like meme stock like AMC or BBBY, right? They have to keep them. They cannot invest that money in stocks too. But they want to do in a way that they want to keep the money liquid. So liquid means they want to they can give the money back to the users if they ask for it. But at the same time, they want to make some good returns on it. So what's the best way to do that? Well, one of the best ways to do that is U.S. Treasuries. Right, U.S. Treasuries are, you're betting on the United States government, so they don't collapse. So if they collapse, you won't get your money back. But U.S. government is not likely to collapse, right? So you want to invest, you put all that money in U.S. Treasuries. Now in U.S. Treasuries, there are two types, right? There are two types. There are long-term, and then there are short-term. So long-term is usually about 10 years. Short term is usually about 1 year. So basically you lock your money up. So those in DeFi, you probably understand this concept. You lock your money up for a year for a return. Now, if you lock it up for 10 years, you probably get more return, and that's good, right? But it's illiquid. This is illiquid, but bigger return. For 1 year, this is liquid, but smaller return. So you get trade-offs like that. So now you're a bank, you have to think about these two, right? Where do you want to park that billions of dollars that people deposited into your bank? Well, in the case of SVB, I don't want to say, like, if you are a normal person, you understand that you're a bank and people want to withdraw money sometimes. So you can't really park your money in 10-year treasuries. This is a bad idea, right? You want to go with short term because that's easier. I mean, you get a small return, but you're able to return money to people faster. However, SVB, well, they're kind of greedy. They want, we want more money because people are probably not going to get their money back, right? So they don't want to withdraw that often. So we're going to park it in the 10-year, and we'll have bigger returns. Well, we'll see how this is a problem. So they did that in the middle. So the biggest fatal mistake, right, SVB did was that they parked it in long-term treasuries in 2019 to 2020. Why? Why is this a problem? Why did they do that? Why is this a fatal mistake? Well, the fatal mistake is that they did this because they wanted more money and they think that people won't go for a bank run. Now, the problem is Jerome Powell, our favorite Fed, right? Powell, he's the guy in charge of Fed. He's been raising interest rate, all right? He's been raising interest rates insanely fast. So in the last year or two, it went from 0% all the way to 4% plus. So it's going to go even higher. Because the U.S. has a bunch of inflation problem going on right now, so they're trying to slow the economy down by raising the interest rate. But now, Jerome Powell raised the rate to 4%. Now, when you invest the treasuries, 10-year treasuries, in 2019, if you invest in treasuries, at that time, the interest rate was 0%. So your return for the treasuries was about, I don't know, I would say like 1% return, right? If you get 1% return in 2009 for 10-year treasury. So, you know, the SVB, the bank was like, all right, we'll take the 1% return, you know, it's better than keeping the cash, and we make some money after for $1 billion. Let's say if you have $100 billion in the bank and you put it in treasuries, you make $1 billion in 10 years doing nothing, right? So that's great, pretty good. But the problem is the Fed raised the rates, kept going up. So now, 3 years later, the same 10-year treasury yields 5%. Let's say 5%, right? Now, the same treasury can yield 5%. So if you buy the 10-year treasury in 2009, you only get 1% return in 10 years. But now, if you buy the same 10-year treasury, now it returns 5% in 10 years. So now this thing, it's pretty much the value of this thing is now going to trash. It's garbage. Because no one, why would I want to buy something for 1% return when I can get it now for 5% return, right? Nobody wants that. So now they had a problem. They're locked up. They can't really get the money back because they're locked up for 10 years. They can't really at 1%. So now what happened Friday was that they are now in trouble because people know about this. They're in trouble, and people started withdrawing money because of, you know, SI. Remember, SI is the other bank, right, that failed, the crypto bank, Silvergate. So if you're in crypto, you know that this whole thing failed. This stock went from like $162 to $2. So Silvergate failed. Now people are panicking. They're like, hey, what happened to SI? Maybe SVB is also failing. So Thursday, people started withdrawing a ton of money. People withdrew tons of money from SVB. So now SVB, right? People withdraw a ton of money from SVB. So now SVB has a problem because they parked people's thing. They locked up people's money up in treasuries. Now they can't like get the money out because they're locked in treasuries. So what do? Now you can treasuries, you can actually trade it on the open market. So if you don't want to wait 10 years for the money to unlock, you can trade the derivative, the treasuries on the market, and people will buy it. But the problem is no one wants to buy this shit. This is a piece of shit. Nobody wants this because you can get it for 5 years. Why would you buy this, right? So now they had to dump all of those treasuries in the open market for about, I don't know, for big loss. SVB dumped their treasuries, right, for huge loss because in the open market nobody wants to buy this, right? So let me move myself a little bit here. So nobody wants to take on this loss. Nobody so they, in order to get cash, they have to sell the treasuries for a huge loss so they can use the cash to repay people, to get people back their withdrawals. Now, when the news of this, you know, the company came out, SVB came out and said, hey, we did this because we need to have liquid cash to pay people when they withdraw. When the news hit this, the whole market panicked. The whole startup ecosystem panicked. Everybody went into SVB to withdraw their money because they're like, oh, shit, this is what they did? This is what they did with our money? Then our cash is not safe. We need to get our money out. So this is what happened. This created a bank run. It made the situation even worse. Now, even more people want to come to SVB and get their money out. Now, there's obviously no way SVB can cover the money one-to-one because they sold all of this stuff at a huge loss. So now there's a ton of money missing in the bank, and it caused a cascaded bank run on SVB. And SVB finally said, you know, the CEO said, yeah, we should be okay if you don't withdraw your money, which is true. If people don't withdraw their money in 10 years, they will get their money back. But everybody went for a run. They went for a bank run. So the whole thing accelerated into a giant bank run, and SVB could not pay people back. And that's where we are today. SVB is now took over by the California government, by FDIC, and we don't know what's going to happen. One huge thing is that this is going to have a contagion on not just the regular banking market, but in crypto market as well. Because a lot of crypto companies park their money in SVB as well. And one big one is USDC. So if you look at USDC right now, it's actually trading at 90 cents. I believe this is the lowest of all time. I don't think it ever traded this much. So it's pretty much depegged from the dollar. Why? Because USDC came out and said they have about $2 billion in SVB. So whether they can get that money out, it's up in the air, but it's not likely they're going to get the full $2 billion back. So that's why people are selling their USDC in order to protect their money. Now, if you are contrarian, if you think that USDC can get out of this unscathed, then you can probably buy USDC, right, for arbitrage, because it's only 90 cents when it's worth $1. So this is a free 10%, but I am not saying that will happen, because this is highly dangerous play, because we don't know what's going to happen with Silicon Valley Bank. So if they're able to recover the money, then it will shoot right back to the dollar. But if they're not, it will continue to go down, and USDC might cause a giant contagion in the crypto market as well. So this is similar to the 2008 crisis. When one bank fails, then they all start to fail, because they are all linked to each other. What's really funny is that Tether is trading at $1. So nothing's happening to Tether, because the CEO came out and said Tether doesn't have any exposure to SVB. That's really funny, right? Because Tether cannot do any business with SVB because they are shady as fuck. But they can only do business with shady banks. So we only do business with shady banks, so we're not exposed to SVB. Therefore, our peg is safe. Wow, what a weird world we live in. Anyway, I hope you guys find this video helpful. I hope that my explanation helped you understand this whole crisis. I'll be back with more videos now, because this whole thing, the drama has picked up. So I'll be back. Make sure to follow me here. Come to my Discord. Talk to me every day. Come to my Twitter. But yeah, be sure to tune in on my YouTube channel. I'll be back. Glad to see you guys, and glad to be back. I'll see you guys in the next video.